Welcome to the Branding Highway podcast, where local businesses meet the community and share their unique stories. Let's hit the road with your host and voice of the podcast, Mike Sedita.
You are now entering the Branding Highway. I'm your host, Mike Sedita, and today we're joined by Matt Moore. He is the president of Real Property Management Blue Sky. Matt, how you doing today?
Doing great, thank you. Trying to stay warm in Florida today.
Yeah, the timing of this, we like to break down the fourth wall like Deadpool on this podcast. It is freezing cold here. We are going through a winter spurt. There's snow on the beaches in Florida today. Not where we are, but in the state itself. So we're going to make the most of it here and maybe get a little blue sky into this podcast and talk a little bit about what you do and let people get to know you.
Thank you.
You and I met through some networking, through a networking group, the Bay Network, which you're a part of, and some of my friends are a part of, and you were nice enough to come on and talk to us a little bit about what you do. So, the first question I always have for business owners is, first and foremost, just tell us a little bit about what you do.
In short, my goal is to manage the creation of wealth through property management for homeowners and investors. I think that's a slightly different take than what we often hear from property management. We think about rents and collections and things like that, but really what we're doing is managing wealth, just through a different tactic and avenue than what we sort of think about most of the time, through providing, our dollars in a bank account and investing in stocks and bonds and things like that.
So let me ask you this. Most of your investors, are their properties short-term rentals, long-term rentals? Is it a mix? What kind of allocation is that?
For me, I focus just on long-term rentals. The two are a very different business. It's maybe something that I will have some interest in the future, but long-term rental is where my experience is, and that's what excites me a bit more. Short-terms are more transactional. It's great as well. But I focus on one thing just to make sure I provide the greatest service to my customers.
Well, it's a high risk, high reward, right? Like it's the difference between investing in an equity investment, like a short-term rental. I would think of more like an equity investment. It could be volatile. You might not have the rental done, but you're going to get big bang for those months that you do get it. Whereas the long-term rental is more like that bond investment that's going to continue to grow over time, and you're going to get that accumulation. I mean, would that be a fair analogy?
Absolutely. It's a very fair analogy. It's a long-term play in the market, and investors, whether they're in other investments as well, often use real estate because of to reduce the volatility in the long-term market overall. And some will keep them for 2 or 3 or 5 years. Sometimes it's their own home that they decide to rent out and keep for a long time. Sometimes the goal is to buy it and rent it for 5 years and then sell it and make some money and then go buy another one. There's a lot of benefits in long-term real estate from a rental perspective.
Well, yeah, and then that's not even that's the investment side of it. That's not even talking about the writing off on the expense side of it. I mean, we're not tax accountants here. We're not going to make any recommendations. Right. We're not H&R Block, but there is a whole advantage to having those properties with write-offs and things you can run through your entity. Are most of the people you're dealing with kind of shelled under that entity, like XYZ properties that you met? Like for me, just using me as an example, Mike Sedita. If I made up some silly little Sunbiz MS Properties LLC, are most of the people structured like that, or is it a lot of individual people?
No, not necessarily. There are some advantages, mostly from an asset protection perspective, to put it under an LLC. So many do that do it as an actual intentional play for, investing in wealth development. But many, it just sort of is accidental for them. They decide to move out of the state or another place, and they want to keep their house long term. And there's really only advantage to that once you have several properties. And again, I really shouldn't be discussing like the legalities of those things, and I'm not an accountant. Those things would be discussed there. But you alluded to what the benefits of a couple of the other benefits of real estate, and one of them is tax benefits. In real estate investing from a residential perspective specifically, we think of 4 pillars. And you mentioned one of them. The tax benefits can be really, really great. They're one of the greatest ways to manage taxes that are legal, and many, many do it. And a lot of people don't realize how many people do it. The other one is cash flow. That's the one that we typically think of. We have the rent of, let's say, $1,000 a month. That's really low today. Let's use $2,000, right? And maybe my mortgage is $1,200. We have an $800 swing there. There's expenses in there, so maybe you net $500 a month. That's the cash flow, which can be very good, of course, depending on the overall situation. But there's also equity development. So that renter is paying down your mortgage, right? You are letting them live there, but they're paying down your mortgage, and you're getting the tax benefits and the cash flow. And then lastly, you're getting appreciation at the same time. So over a 20-year period here, we're about an 8% appreciation. In the last several years, like
It's been higher. Yeah,
it's
yeah.
been a lot higher.
In this market.
Lower right now, but over a long-term play, it's a very good way to build wealth. And then when you think about that appreciation and the other 3 benefits that we get, it's really a fabulous way to invest your money.
Well, yeah, and then the other part of it too, you bring it up, is 3 and 4, the equity and the appreciation. So if my home is appreciating and you're paying down my balance on my house, you get a wider spread on that piece of property. So now if I'm that person, if it's MS Properties and I have that property and I'm getting that wider spread, now I've created more actual cash flow to be able to roll into another property and another property and another property as they grow. So over time, it's almost like compounding or stacking. That first property leads to the second. By the time you get to the second and have that cash flow and the appreciation and the equity built up, you're able to do more and more and more and build kind of like a monopoly. You start putting homes and hotels on these places. Like you're kind of doing the same. It's kind of that same theory, right? Like monopoly. It's you start with one house, you add a second, a third, a fourth, and whatever. So do you guys do in the crux of your services, do you guys manage all 4 pillars for a client?
So no, because I'm not an accountant, but we have accountants that we work with, of course, that we can refer out, and some that actually specialize in managing their portfolio that has real estate in it. So that's important. But we would manage, managing the cash flow, of course. We can even manage the mortgage payments and things like that. So we sort of just manage the full process of turning that house into a investment, from the beginning of, let's just say you came to me and said, Matt, I want to buy this house for an investment purpose. We could even help you analyze that. We have a tool that goes into all the details and lays out the cash flow, appreciation, and tax benefits and equity development that would have. You might decide, oh, it's a great buy. That's fabulous. And then we could help get it rent ready for you. There might be a little bit of rehab, maybe just some painting. It kind of depends on the condition, and then you go through the whole process of the leasing, getting the tenants, screening the tenants, and all those things, and then collecting rents. So, and then that cycle turns over on itself. And long term, you might decide to sell it. I am a licensed real estate agent. You have to be one in Florida to do property management as a profession. But typically I don't do buy and selling, and some property managers do, but I want to focus on just the property management. It is a job in and of itself. The other reason we do that is to protect realtors that you are their customer for. You might have a realtor. If they start working with me, I want to promise to them that, hey, Mike is going to still work with you when it comes time to sell.
Yeah.
Otherwise, the relationship gets a little tension, in the middle of it.
Well, yeah, and it's good for you as well, because then if you have real estate agents that are helping people buy their properties, now you're expanding your network, and they say, hey, look,
Right.
You're buying this property and you want to be in it for a couple of years and you want to make it a rental. We have Matt who can now take over and do all that management for you if that's not their wheelhouse.
That's right. And we even provide a very solid referral fee for realtors that set all that up for us, and bring those customers. So we really try to make that a partnership.
So let me ask you this, I'm just kind of thinking of scenarios here. So do you run into and again, I don't know if this is quite accurate. I mean, this is your specialty, not mine. I'm just a podcast host, but is it still true to form from a financing stand? I mean, well, first off, are most of your people cash buyers, or a lot of them are buying and they have a mortgage on it, and then they're kind of generating that the float between what their mortgage is and what their rental is?
So when you're looking at investors that are doing this as a primary income, you start to get into scenarios where they have cash and they're managing their portfolio with cash. But the reality is that putting a mortgage on a home is a way to leverage, right? And wealth can be developed faster by leveraging the wealth that you have. So most have a mortgage, or a loan on the properties. When you're talking about investors specifically, that you get into some hard loans, some other things that are a little, in that industry specifically. But most will have a loan on their property or use a loan to purchase it. And that's totally fine. And when you're thinking about it, we think about from a homeowner's perspective, if you or I were to go buy a new house, well, interest rates are really high. Well, they are high because they've been really low for a while.
Right.
But from an investor's perspective, a 5% interest rate, 6%, 7% is actually not that
if
big
the rent is there, right? Like, I mean, that's
Right.
if the cash flow is there. My biggest thing, the reason I was asking it was more like, is it still, if it's not your primary residence, doesn't it require like 20% down payment on a property if it's going to be a rental property?
Oh, yes. Typically, the requirements are higher from a down payment perspective. And I would get, with your mortgage broker to sort of walk all that through. But yes, I'll tell you though, a very common way people get into real estate investing is they need to move for one reason or another.
They live there for 6 months.
The two biggest financial mistakes in my life, I've had 3 big financial mistakes. The 2 biggest ones were selling the homes that I had years ago. Because by today, they would have been paid off. All these benefits would have been there. And there were, unfortunately, the time I just didn't feel confident that I could manage it from a cash flow and risk perspective.
Yeah, it's a risk. But if you don't have a tenant, you're kind of screwed. It's kind of one of those things.
I don't want to. Well, so that is a bit of a misnomer. You're not screwed. So the thing is that when you're managing a property as a business, it's just part of the overall perspective that you're going to have to deal with some issues here and there. You're going to have turnover costs. It's just part of the cost of doing business, is the way I say it.
Yeah.
And when you think about all the benefits, it's a worthwhile cost. Here's a proof text. Now, we all have heard of these big companies have been buying out houses, right? And
BlackRock.
renting them out.
Yeah.
What BlackRock? Yeah, they're an example.
They're the culprit, one of the big ones.
They're not in it for cash flow. Look, what do you mean they're not in it for cash flow? No, they're in it for the other benefits, the tax appreciation and equity development, because they understand the long-term play. But the reality is, for an average, what we call them accidental investors sometimes, where, hey, I didn't intend to rent out my home, but I'm there now, right, and I kind of want to do that. I want to move back. I would like to. I've heard I can make some money. All those things. For us, cash flow matters often. If you were to tell me, or if I were to tell you, Mike, you're going to get these other benefits, but you're going to be negative on cash flow $250 a month, you might say, well, I don't know. But when you think about the overall grand perspective,
it's not bad.
Let's just say how much money do you put a month into a 401k and investment? Your play is long-term there as well.
Right.
You're not going to get the return on that for how long? It might be until you retire, depending on the investment. But we sort of get scared about putting that money into a home, when the reality is a home in a lot of ways is a much more solid investment. And you're getting cash flow now and tax benefits now, not just when you retire down the road.
Listen, you're preaching to the choir. I mean, I do marketing for a living. Most of the clients I talk to on a daily basis think of marketing as an expense, similar to the way you'd be thinking of that rental property as an expense that you're going to have to cover for whatever your shortage is. not really thinking about it as a long-term investment. And marketing's the same thing. You're investing now over a period of time consistently so that your brand becomes relevant. Your brand becomes the go-to brand. It's just like building that portfolio on a home. It's kind of that making sure you got that upward tick. And you're right. I mean, like, listen, with the exception of a window of history in time from probably like 2007, late 2007 till about 2010-ish,
right.
A 3-year window in 250 years of America being America is a short time when real estate didn't go up in that window. And, it's funny. You're talking about, not selling homes. My ex-wife and I bought this property in Georgia. We bought it August 8th of 2008. The market had not quite bottomed out, but it was sure getting there like hell in a handbasket. It was going, right? And it was one of these communities that, like, there's 4 or 5 different models or whatever. We had Model X. Model X was selling for like $400,000 in 2006. We got it for $275,000 in 2008, right? So, like, real estate is location, but it's also timing, right? That timing was good. I could give you this address right now. It blows my mind. I can give you the address right now in Cumming, Georgia. This house is listed for $780,000, and we still sold it and made money because of the way we got into it. But you're absolutely right. Like, if you just hang on to that stuff and you're like, but life kind of gets in the way for a lot of people. Like, we had to move here to take care of my parents. They were sick. We needed to consolidate, all that stuff. So it's like, do I need to have a property up in Georgia that I need to manage? Now, if I had you up there or, in that area, then maybe it might be a different story. And that's really the service that you provide, right? Especially in Florida, it's got to be great because I would think a handful of your clients or more are folks that Florida might be their second state or, part of their overall living arrangement.
Yeah, that's absolutely true. And you sort of talked about timing, and we're in an interesting timing right now. The housing market is sort of in this flux period where the prices have not really dropped, but the houses are not selling either. They're not selling quickly or at the speed that they were for sure. And it's probably, the average selling time period is longer than what we would consider normal, even in a normal period. So, current customers that I'm gathering are many times they're the folks that have had their house up for sale a while and can't sell it. So they're thinking about, well, let's consider renting it out. And that enables that homeowner to bypass the issue of timing right now. Well, let's just hold on to this house. Let's make some money, some tax benefits along the way. And then maybe we'll sell it a year or 2 or 3 or 5 years, or they might decide, oh, well, this has been really great. We don't need to sell this house. Let's hold on to it longer, as part of our investment strategy long term.
So one of the things I want to go back to really quick, and we're kind of literally on question 1 here because it's so interesting to me. Do you run into now my Alzheimer's is kicking in because I had the question right in the front of my mind and I kind of dropped out of there. We'll come back to it. Tell us a little bit specifically about your journey. I mean, have you always been a real estate guy? Did you have a past life selling like shoe door-to-door shoe salesman? What was your journey?
Yeah, my journey has been in technology primarily and consulting and customer experience. So from very early on, like when I was 13 years old, I got my first computer and I rolled right into doing software implementations and consulting very early on in my early 20s. Went to USF and got my degree in management information systems. And then I worked my way through some consulting and software companies and became an executive for a large software company in the Tampa Bay area. Okay. And I really enjoyed that. But I think how that translates, and I'll come back. Well, let me go back for a second. The first house my wife and I bought, we did a house hack. Okay. Like a common strategy in real estate is you buy, like for young people especially, you buy a house, fix it up, and then sell it a few years later. And we did that. And that sort of started my love with real estate. And then over the years, I have done rehabs and rentals and investing. And in recent years, probably 5-6 years ago, my wife and I started getting more serious into using real estate as a long-term investment and buying our own properties. And so when a career change happened in 2023 that I was unplanned, I started considering like, what do I want to do?
Right.
Do I want to continue to work for a corporation? And I was an executive in a corporation. I really loved that. I had a fabulous team. It was worldwide consulting and customer service team, which I really enjoyed. And I got to be in technology a lot. But the interesting thing is, as I thought about it more, I love real estate and I love investing in real estate a lot. And I love doing the property management side of it. I really enjoy that part, which some people might say, are you crazy? Well,
there's
here's
a lot
the
of,
thing.
I mean, listen, a real estate transaction in general, there are all the, you got a buyer and a seller, and it's emotional, it's their house, and they want this house, etc. But what you do, when I look at it, same thing. I would say the same thing, like the day-to-day, having to deal with the renter, having to make sure if the mortgage is paid, having to, when someone has, hey, my fuse box blew out, they're calling you, right? I mean, they're not calling the owner. You're managing all that stuff. You're the in-between guy that's taking all the shrapnel.
That's very true. And so it's one of the things that's interesting is I think about my career of primarily being a technology consultant and customer experience. All of that applies in this business as well. Every single bit of it. We are a technology-driven company. A lot of property managers are. There's some that are still out there doing things sort of old ways, of course. But as you can hopefully tell today, I like to be consultative. I want to help my customers get the most out of their investment, which happens to be their property. And then we get to create a great customer experience for the owner and the renters alike. And that creates a combination that is enjoyable for me because I love those things, but it also provides a great home for a renter. And then the owners get to have the benefits of having an investment in real estate.
Yeah, everybody's really winning in that case, except when you have the times. I mean, there's a stretch here in the Tampa market where rent had gotten so crazy where it's hard for a lot of renters where they're kind of getting boxed out of their current situation. But in your world, I mean, that's good for your investors, but it's finding the right home for the right people. Tampa's a unique market just because it really is like after 2020 and COVID and people coming from other states to come here and some of the advantages of being here. And then now what I've noticed, and maybe your experience might be a little bit different with this, but after last fall and back-to-back hurricanes of people that came here after COVID and are all of a sudden in these areas, and now they're like, wait a minute, there's really hurricanes that could actually like wipe my house off the face of the planet. A lot of them are going back and they're either rehabbing their home to kind of fall in your lap to manage, or they're just walking away. So there's always moving parts that are going on in what you do, which is really interesting. And it's in a nice position to be in. You said you love this, but one of the questions I always like to ask entrepreneurs is, what do you do for fun? Because when you're not doing this, even though you love what you do, when you're not doing this, how do you unplug and recharge so that you can be the best at what you're doing when you're doing this?
Yeah, so I love a lot of different hobbies. So sometimes it's hard to pin it down, but usually it comes down to two things, at least in the last 5 years. And one of them has been a lifelong. Most recently, I love cycling. I used to do triathlons in the 2000s and did a lot of cycling, but I had a major back issue and it just put me on the sidelines for a long time. But I was able to get back into it for about 6 years ago. And I love long distance endurance cycling. So when I say long distance, like an average ride is 40 miles.
Ew,
that's long distance. I love the 100-mile rides, 75-mile rides. It's we do it with, most of the time I'm riding with a group, so it is social as well. It's enjoyable. Right. We ride in a Peloton, so it's sort of thrilling. It frees my mind for that period of time. I actually have the best thoughts about my life and business and everything and ideas when I'm cycling or running. So if I'm on my own, I actually I have a little recorder and I'll stop my bike and make a recording to stop. So, and then I got back into running a little bit after a foot injury, and I actually am signed up for Gasparilla to do their 8K. I love running. It's a little harder on the body. I'm not a young buck anymore, but I do love it. And I love doing the events, something to look forward to. My longest pastime is fishing. I love to take my family fishing. We love boating,
Like
enjoying the
out on the
Tampa Bay.
Gulf, out on the Gulf,
Yeah.
or
So I grew up on Tarpon Lake. So here
okay,
locally, I'm a native of the Tampa Bay area. I love freshwater fishing, but in the last most of my adult life, it's been more saltwater fishing in the bay, out in the Gulf, and
right.
so I enjoy that. I just love being outside. We love going to swim with the manatees as well, do
Cool.
scalloping. Like it's just so we enjoy it a lot.
Well, one of the nice things about cycling, at least in Florida, is, I mean, for me, I don't like cycling. You like cycling, but like it's not super hilly. Like, I mean, like I lived in Georgia where like I get 10 feet and I'm like, I'm ready to out of breath because you got to climb a mountain on a bike. Here it's mostly flat, other than probably going on and off an off ramp if you were doing that. So you could do, but 40 miles, like in my head, I'm thinking about that from Wesley Chapel. That's like literally going to, gosh, almost to Tampa and all the way back. I mean, that's like a 20 there and 20 back type of deal. That's quite a bit of riding. Do you have are you exploring new routes when you do that, or do you kind of have a route that is your go-to?
Yeah, there's routes that are my go-to for sure on the Suncoast Parkway because I live real close to there. But one of my favorite rides was the Pinellas Trail goes from Trinity
it's
all
cool.
the way to downtown St. Pete. So I started at like 4:30 in the morning, and my goal was actually to ride to my first house that I referenced earlier that we rehabbed, which is in Shore Acres in St. Petersburg. So I rode all the way there and then all the way back. And then we do other rides. We ride, it's interesting you say flat, because if you're a serious cyclist, you seek out the hills.
Yeah,
as well.
right.
So San Antonio and
City.
Brooksville, Dade City, there are hills there. So we do ride over there some. There are a lot of organized rides in those areas that are usually a metric century or a century. Metric century with 66 miles. A century would be 100 miles. So I've done some rides out there. So you climb, I don't know, 3,500 feet over the ride and do 100 miles. It's fun though. You're going 10 miles an hour up, maybe. And on the way down, you're doing, I've gotten up to 45 miles an hour. Like it's a little scary, but it's thrilling at the same time.
That Pinellas Trail run to St. Pete and back, how many miles is that?
It was 100 miles from Trinity to down, like past downtown and back. It was the hardest ride I've ever done.
Yeah.
And it was because it was in the summer.
Yeah.
And I actually stopped at the store about 70 miles in and got a 10-pound bag of ice and put it behind my neck because I was so overheated. I felt like I was getting heat exhaustion. And, it's interesting. Little trick for cycling and long distance people is drink soda towards the end.
Sugar.
It's cold, sugar, quick, caffeine all at the same time. So I got a big old thing of soda and a bag of ice. And I'm going down the road.
The question was, what do you do for fun? And you talked about a time when you overheated and almost died. Perfect.
I actually my favorite time to run and ride is in the middle of summer. Like you'll find me at 3:00 in the afternoon on a summer day in August running. And I love it.
Yeah.
I'm a little crazy though.
You're clearly a little sick. You're clearly slightly sick, which is good. Yeah. So, as we start to wrap this up, one of the things, and we talked about, obviously you have a passion for what you do, and there's complexities in the business that you handle for your investors. What would be the one thing, like if someone's listening to this and they're either on the verge of buying that property or, they have a property, they're getting ready to move, but they don't want to give it up. What do they need to know about you, your business? Like, what is the one thing that separates you from, the other property managers that are out there?
So I don't just talk about rent and cash flow. My goal is to generate wealth for you. That's really the difference. One of the ways we do that is Real Property Management has a proprietary wealth optimizer is what we call it. And within a minute, I can enter some basic figures about a home, and we can generate a 10-year pro forma of how that home is going to perform. Now, and we can go in and like adjust a lot more things to sort of do what if analysis and figure out more details, including the cost of property management or including doing rehab work and maintenance work along the way and account for all of those things. but it'll tell you what's your estimated tax benefit, what's the appreciation you're going to get. We really try to focus on building wealth. And I want a relational aspect to everything that I'm doing, more than just, processing payments and dealing with tenants. That's not my goal. Yes, that's part of the business. In every business, we have sort of the things that are not as much loved, but my goal is to be more relational and help my customers build wealth through their homes.
So folks, if you're listening to this podcast or watching it on our YouTube channel, the big thing you need to understand about working with Matt and the Real Property Management Group is it's technology driven. They live by their 4 pillars of, your taxes, your cash flow, your equity in your home, and your appreciation. That's kind of how they build the program. But the sweet spot to me, listening to this as someone who's not a real estate guy, is that technology to be able to kind of give you almost like a crystal ball. I mean, I know it's not a crystal ball and I'm not making any claims on real estate, but hey, this is what it's worth today. This is what it could be worth in 5 years. This is what you can generate in rent. It sort of takes a little bit of the guesswork out of it. So if you're looking for somebody that can manage your property, help you grow your wealth through property management, through property, accumulation, you want to contact Matt and his team. The best number to reach Matt directly is 813-625-9595. Matt Moore, thank you so much for taking a ride down the branding highway with us. You have an amazing day. Stay warm.
Thank you very much. I appreciate the time.
We hope you enjoyed your ride down the branding highway. This has been a 16W Media Group production. Don't forget to take the next exit at 16W. Visit 16wmediagroup.com. If you want to be part of the journey, reach out to info@16wmediagroup.com.